Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for November 3rd, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've continued to slide lower here recently. You can see after price failed to get above 44.75s, we've seen price break down. Bulls attempted to hold 21.20 in that zone, but instead the stops came out and we've dropped to the next level down here, pushing back toward the 20.85s. So we've seen this thing kind of push back below 2100 to 2103.75, which is a very, very important zone in the charts. This is also below the Brexit high of the key range here. So you had the Brexit high and the Brexit low forming that key range. This is the time where we're really breaking through that range and pushing below it. Typically speaking, that opens up a move at least back to the midpoint of that range. That's 2050 half. So we could be looking at more downside ahead, especially if price cannot reestablish back above this 2103.75. So 2103.75, very important. I would say that any push into that zone could be defended for a continuation in the 2050 half and perhaps a continuation back toward 1981 half. What I mentioned here over the last few days is this large rounded top here and how bulls continue to get defended here by bears that come in and just every push higher they're getting rotated lower and the stops are starting to come out. Typically speaking, that releases a big amount of energy and you go back to the last major pivot, that's 1981 half. Now with the election just days away now, and then we also have NFP Friday morning, anything can happen here, but 2103.75 is still the major pivot to watch. Back above that level could squeeze a little bit. Otherwise, failing to get back above that zone targets 2050 half as a break of that 2103.75 has now become quite important. All right, let's take a look at the intraday time frame. So here's the intraday time frame for the ES. One thing that I put out here yesterday, here it is, that's the FOMC level. So the Fed chose to keep the rates unchanged yet again. So FOMC 1102, that's November 2nd, and it's 2095 quarter. So that's the key level right there, and you can kind of see already how the price is played around it. Remember, we never get too far away from it. Price gets away, then snaps back to it. It pushes back, it tries to make it support, it fails, so it chops. It goes down, comes back up, right? And so it's holding on it. So this is a very important short-term pivot to watch. And I've put these across all the major futures markets that we cover. All right, so what we want to watch out for here is 2100. That's clearly an important area. 2103.75 is very important as well, but 2100 is the early key level here. This is where bears are currently positioned right now. I would think that bears are still trying to defend that zone. Eventually, a push through it could be bullish short term. Obviously, you still have 03.75 to contend with, but this is the clear pivot right now. Right now we also have a bit of an expanding range here. So if we fail to get above 2100, we could be making our way right back toward recent lows and again into that 2050 half. All right, let's take a look now at crude oil. Here's crude. If we bring up that daily time frame with the weekly PivotBoss pivots, here it is. We've seen quite a bit of selling pressure. Here's the previous week's close and low immediately offered. A pullback in the 47 quarter from below was defended. We've seen a continuation precisely into 45s, which was our next area of support. 45s held throughout the session and price bounced almost a point off that area headed into RTH today. So a very decent area of support, 45s. We found it in the trading room. We said, hey, 45s is the last level of support that the OTF bulls want to defend. If OTF bulls cannot defend that zone, the next major level down is going to be 43s. So there's nothing between 45 and 43 really. So if bulls cannot do a good job of holding these 45s, I think we see even more weakness in the 43, and that'll be the next major area for bulls to defend. Right now, we're not seeing any signs of a rejection down here just yet. 45s have held. We have seen a bounce. But in terms of a rejection, we haven't seen that. Instead, we're seeing quite the opposite. We've seen a continuation downward, and now price is pushing into the midpoint of the previous session and so far being defended already. That could be a selling pressure for new lows. So up here, anything above the previous session's midpoint here, the previous session's midpoint being 45.72, Anything above 45.72 right now being defended and rejected, and that could lead to another round of weakness into 45s, followed by the potential to see a move even lower. So keep that in mind right now. All right, let's take a look here at the intraday time frame. What we're looking at again is 45s. That's the zone we were watching yesterday, 45. We watched as it bounced here, and then we were able to identify the trading range market that was playing out for the most part early in its development. Later on in the day, it pushed above, came back and held that LVN, the top, and is now, again, holding in this zone. So at the moment, there is a little bit of a clean market structure up, and prices, bulls are trying to keep 45.40 bid. I think right up here you have a major LVN in 46.20, and then you're also seeing defense already off 45.90. So right now, basically, if we're talking about the 45.72s, if bears continue to defend prices above that zone and we don't see acceptance above it, we could be looking at a push through the 45.40s to run these stops, and all of a sudden you start driving downward. So while the bulls came in and defended 45s on the first turn throughout the session, we're off that zone. I don't know if it's going to hold on a perfect test the next time. You may see it drive below and then fail to hold, which leads to a reversal, but I don't see this thing just coming perfectly to 45 and bouncing as we saw yesterday. So keep that in mind. I think bears are going to try and drive price through that zone and get to the next level down. Keep an eye on 46s, above 46s, squeezes back to 46.90. All right, let's take a look at gold futures here. Now, gold ran into a buzzsaw of resistance. This is something we talked about, could be the potential of the previous session. We had a major two-day up move in gold, and I thought, wow, it's finally coming along, because we had the drop here, we had the modest rejection tail here, we also had a rejection on top that helped us identify 50 to 52 as a zone to absorb for a shot at seeing a move back to 1306 to 1310. That was the primary idea. It's finally come to fruition. However, I began to waffle in here because I usually say that you like 2, maybe 3 days, and you got to get going. If you're not get going on the 4th day, you got to get iffy about the trade and be very, very careful about it. And you can see it took the better part of a week plus to really even push to new highs. Then from there, another week. So it wasn't the easiest to stay in overall compared to what we've seen usually with gold. But nonetheless, it was a great idea there. But the next idea was that if we come into 1306, 1305 to 1306, 1310, bears that took this support level offered are going to come in and redefend at that area. And that's what I mentioned before. That's going to be an area where bears will want to look to do business. And from there, you'll likely look for price to come back to value at 1263.20, followed by pushing to new lows and perhaps dropping to the bottom of the previous distribution, which puts you into 1200. So this is a big time move here. Bulls still have an opportunity to come in and defend. So if price comes in to say 1280, bulls can still come in and defend that and try to get it going higher. But right now, initially, our idea that 1306 to 1310 was going to be the target, the final target for this 1250 is completed. And now bears have already flipped. I know some bears in our trading room already identified that zone yesterday as the area to sell in their own analysis, in addition to mine as well. So, I mean, it's all kind of confluence in that zone. You can see how traders are already getting paid on that idea. So the idea now is any push into 1300 or above likely to be defended by bears for a rotation, perhaps into 1263.20 at the very least. All right, let's take a look here at the NQ. Here's the NQ. Basically, the NQ has seen a steady continuation, clear weakness. This is the biggest multi-day pullback that I can remember in recent memory, if not the entire year. So here it is in terms of days, that is. I mean, we started the year pretty heavy. So here's the first trading day of the year there. That's a pretty sustained decline. This is another sustained decline. This is another sustained decline. This one was pretty decent, but really a lot of it was that big 2-day move. This one, you can see again a sustained move for several days. This is only a rare occasion that we've seen something this defined in the NQ this year without seeing immediate buying pressure come out of it. So clearly, we're getting some of that flush that I think the broader market wanted to see. It's hard for pros to come in here and buy these highs. It's just not how pros are wired. We'd rather see a pullback into support. We'd rather see a violation of support and a trap. We want to see a flush so that we can buy better prices and look to get paid. So this is a good thing right here for the broader market, for those that want to put in bigger money for perhaps a late year run. This is a really good pullback in the NQ, but we haven't found rejection just yet. So there could be more weakness ahead, is the idea. We could be perhaps targeting this recent low, 46.25, perhaps a little below it, 4,600, and then start to make our way up. So there could be more weakness ahead. So we also got NFP coming up. We have the election. There's a lot of more uncertainty. So I still don't think it's a perfect buying opportunity at the moment, but I think it's developing into something that could be very well received by OTF responsive bulls when the time comes. So keep an eye on this one. I still think there's more downside perhaps into this low 46.25 short term. And if we look at the intraday time frame here, you can see that intraday speaking, we have a new FOMC level here at 47.30. That's from yesterday's market, 11.2. And this morning we've already bounced off of the July 27th FOMC level, which is 46.90.75. So right now we're kind of trading between those two levels. I think that's probably the early range, to fade the edges. If price comes to this low, look to fade it up. If price comes into a high up here, perhaps it'll be faded back down within the current downtrending structure. So right now it could be a fade new highs, fade new lows until we figure out what kind of day this is going to be. And we'll keep an eye on this one the rest of the session. All right, that's it for now. Let's see how these play out the rest of the day. Good luck and trade well.